Do you want to build your wealth but don't know where to start? We've all been there, at the crossroads of aspiration and confusion. In the quest for financial prosperity, knowledge is your most powerful ally. Understanding the intricacies of finances, making informed decisions, and leveraging smart strategies can set the stage for a prosperous future. It's not about the size of your wealth today, but the steps you take to grow it tomorrow. So, stay tuned as we dive into some essential tips and tricks for building your wealth. The first step to wealth creation: understanding your finances. To kick things off, let's dive into the core of money matters: your income, expenses, and savings. This trio forms the bedrock of your finances. To navigate the ocean of wealth creation, you need to have a clear map of your financial landscape. First, let's talk income. This is the money you earn, your financial fuel. It's crucial to have a precise knowledge of your income because it sets the boundaries for your financial planning. Whether it's from a job, a side hustle, or investments, every penny counts. Next, we move to expenses. These are the costs you incur to live, work, and play. Be it rent, groceries, bills, or that much-needed weekend getaway, expenses are a part of life. But it's essential to keep them in check. Don't let your expenses run wild. Tame them. Create a budget and stick to it. Remember, the goal is not to deprive yourself, but to make thoughtful spending decisions. Now, onto savings. This is the portion of your income that you set aside for future use. It's your safety net, your rainy day fund, your financial cushion. Aim to save at least 20% of your income. If that seems daunting, start small and gradually increase it. The important thing is to make saving a habit. Living within your means is not about leading a sparse life, it's about balance. It's about understanding the delicate dance between income, expenses, and savings. It's about making informed decisions that align with your financial goals. And speaking of goals, they are the compass that guides your financial journey. Be it buying a house, starting a business, or planning a dream vacation, your financial goals give your money a purpose. So, take some time to clearly define your financial goals. In the end, it all comes down to one thing: understanding your finances. It's about knowing where your money comes from, where it goes, and where you want it to take you. Once you have a clear understanding of these elements, you're well on your way to building wealth. Remember, understanding your financial situation is the first step towards wealth creation. Once you grasp your financial situation, it's time to make your money work for you through smart investments. Now, what exactly is investing? In simple terms, investing is putting your money into assets with the expectation of generating a return on your investment over time. This could be in the form of interest, dividends, or capital appreciation. Investing is not a one-size-fits-all endeavor. There are different investment options available, each with its own set of risks and rewards. Let's touch on a few of these. First up, stocks. Stocks represent ownership in a company. When you buy a stock, you're essentially buying a piece of that company. The value of your stock goes up or down based on the company's performance. Stocks can be volatile, but they also have the potential for high returns. Next, bonds. Bonds are essentially loans you give to a government or corporation. In return, you receive interest payments over a fixed period and the principal amount back at the end of that period. Bonds are generally considered safer than stocks, but the potential returns are also lower. Real estate is another popular investment option. This involves buying property and making money through rental income, selling the property at a profit, or both. Real estate can provide steady income and long-term appreciation, but requires significant upfront capital. Lastly, mutual funds. These are investment vehicles that pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. Mutual funds provide diversification and are managed by professional fund managers. Speaking of diversification, it's a crucial aspect of investing. Diversification is about spreading your investments across different asset classes to reduce risk. If one investment performs poorly, others might perform well, balancing out your overall returns. Remember, investing is not about getting rich quick. It's about growing your wealth steadily over time. Be patient, stay informed, and make informed decisions. Diversify your investments to spread risk and increase potential returns. Now, let's talk about the safety net of your wealth, an emergency fund. Imagine walking on a tightrope high above the ground with no safety net beneath. Any misstep could be disastrous. That's what financial life can feel like without an emergency fund. It is a buffer that protects you from the unexpected financial pitfalls that could otherwise send you into a whirlwind of debt. An emergency fund is a stash of money set aside to cover the financial surprises life throws your way. These unexpected events can be stressful, not just emotionally, but also financially. Think about medical emergencies, sudden job loss, urgent home repairs, or even an unexpected hefty tax bill. The beauty of an emergency fund lies in its simplicity. It's not about making you wealthy, it's about keeping you secure. It's about ensuring that when life throws you a curveball, you're ready to catch it without falling into financial distress. How much should you keep in your emergency fund? Well, it varies. Financial experts often suggest having 3 to 6 months' worth of living expenses. However, the size of your emergency fund ultimately depends on your personal situation and comfort level. Building an emergency fund may seem daunting, especially if you're starting from scratch. But remember, even the tallest towers were built brick by brick. Start small, make regular contributions, and gradually you'll see your emergency fund grow. An emergency fund is your financial safety net. Don't overlook it. Wealth building isn't just for the present, it's for the future too. Let's discuss retirement planning. Now, when we talk about wealth, we're not just considering the money you have today, but also how you're setting yourself up for the future. And that's where retirement planning comes in. It's about more than just setting aside a little money each month. It's about understanding the power of time, the magic of compound interest, and the importance of starting early. Picture this. You plant a tiny seed today, and with time, it grows into a massive tree. That's similar to how your retirement fund works. The small amount you invest today, with time, can grow into a significant sum that can sustain you in your golden years. Compound interest is the secret ingredient here. Think of it as interest on interest. It's the result of reinvesting interest rather than paying it out. So you earn interest on the initial principal and the accumulated interest from prior periods. Essentially, your money is making more money for you. Now let's talk about starting early. It's a simple math, really. The earlier you start saving, the more time your money has to grow. Even if you can only afford to put aside a small amount, remember that the power of compound interest means that small amount can grow exponentially over time. But it's not just about the money. Planning for retirement early gives you peace of mind. It allows you to dream about your future without the shadow of financial worry. It's about knowing that you'll have the resources to enjoy your golden years, to explore new hobbies, to travel, or simply to relax and enjoy life. So, start today. Even if you feel like you're behind, remember it's never too late to start planning for retirement. Every little bit helps, and the more time you give your money to grow, the more it will reward you in the future. Remember, the earlier you start saving for retirement, the better. So, are you ready to start your journey to wealth creation? Let's quickly revisit the key takeaways from our discussion today. We started by understanding the basics of finances. Remember, knowledge is power, and it's the first step in the journey to becoming financially independent. Next, we talked about the importance of investing wisely. It's not just about making money, but also about making your money work for you. Smart investments can help you grow your wealth exponentially over time. Then, we touched on the criticality of building an emergency fund. Life is unpredictable, and having a safety net can protect you from financial setbacks. Lastly, we highlighted the significance of planning for retirement. It's never too early to start planning for your golden years. The earlier you start, the more comfortable your retirement will be. Start today and build a financially secure future. Remember, every step counts when it comes to building wealth.